Welcome everyone once again to another video. I hope you guys are doing well. Like I've promised in my Telegram group that I'll be providing you guys with an Asian range trading strategy. It's quite simple, quite follow able. You guys can literally just write down these things and wait for it on the charts and just start following these things. And if you're not in my Telegram group, the link is in the description. If you're new to the channel, you have not subscribed yet, it will be a wise choice to subscribe to the channel because I'll be providing the same value, same content over and over again. Right, so let's just move forward with the video. We have two scenarios over here, two assets, right? Not two scenarios, basically one scenario but two assets. We have the beginning of price range, terminus, reversal, range again, sweep of liquidity, or you would call it turtle soup, expansion, again retracement back into the range or the ejection block or something, and then expansion towards the drawn liquidity. Here is the same scenario. The only difference in the two drawings is one chart has taken the low while the other one has not taken the low. So if you're following the logic of Asian range liquidity sweep, and then once you have the sweep, sometimes what happens is you have the sweep and then that sweep also has the sweep. The only reason why that sweep also has the sweep is because there was no SMT between the correlated asset. Okay, so you need to have another asset if you're trading anything, even if it's any particular strategy. You need to have another asset. If it's CRT Quarterly Theory, you need to have another asset to have a reference from. All right, moving on, just keep in mind about what I told you about this image. There are two things to take away from this. Number one is we have a drawn liquidity, we have a range, and we have a sweep on one asset and a failure swing on another. Here we have the two scenarios of how Asian range is portrayed and how it in reality it is, right? So we have the typical AMD formation over here, right? Accumulation, manipulation, distribution, and continuation right there, right? So this can be the Asian session, this can be the London session, this can be the New York session, but it can be anything else as well. It can be the New York session, can be the PM session, and this can be the the Asian session as well, vice versa. This can be the London session, this can be the New York session, this can be the PM session, depending upon the narrative, right? But typically we look at the three drive pattern, the power of three like this, but in reality the power of three can be like this. We have a high and a low, okay, and in between we have multiple changes in the state of delivery over here. I'm not showing it over here, but this is something which I'll extend upon later on. So there was a lot of sauce in that. So we have a high, we have a low, we have a range in between, and we have a new session opening up. So this high to this low and anything which happened in between is a high probability dealing range, not this one. This is not the typical scenario. This is the typical scenario. This is the range. I mean, this high and this low, anything which happened in between is the actual range. You might be thinking, oh, this can be the reversal, this can be the continuation. No, that's not the case, because the drawn liquidity would be at the lows. This is a bearish scenario. You can just do a vice versa for a bullish scenario, right? So moving on with the protocols. Before opening a position, make sure you have an open objective for price to reach, because this is literally like something which I've been mentioning since a very long time. You need to always have a open objective, meaning a draw on liquidity in sight for price to reach at that particular time or that particular day. If you do not have this, no amount of change in the state of delivery, no amount of SSMT, no amount of uh, displacements, imbalances would work unless you have an open objective. If you do not have it, it will just continue to where it was going originally, right? Make sure the generation of liquidity has reached its terminus and is ready to reverse. The terminus meaning what? You see your entry pattern right there at the terminus. So liquidity has to be generated before. For example, over here, a lot of liquidity has been generated. Then price reached its terminus meaning the manipulation. Right there, you'll see something, some sort of entry pattern over here. And then the distribution begins. And the distribution is quick. It does not happen like very slowly and gradually like this drift, right? So this way, this range is as slow as a nail while the distribution is as quick as a cheetah. So just have to make sure that you position yourself in the right time. That's it. Develop a written entry plan to execute a trade. If you do not have this as well, you guys need to work on it. Seriously, just sit down and write down your entry pattern, your execution plan. If you do not have it, you need to acquire more knowledge and more information. If the plan shows itself, don't be hesitant nor show fear. This is something which everyone will relate to. This is something which you guys need. If it shows, execute. If it does not show, stay away. If it shows, execute without fear. So Asian range sweep is usually done when we have a news during the NYAM session. All right. So over here, for example, later in the day you have a major news event or red folder news, right? You will see this pattern working a lot well when you have a news coming up later in the day. Sometimes it can be, this would be London and this would be New York in indices. In Forex, this could be the Asian, this could be the London session, and then New York will just start consolidating after the distribution. So you have to differentiate between which asset class you want to place yourself in during the news time. There's something else as well. Once your objective has been reached, don't overstay your welcome in the trade and exit with profits. This is one of the most important things actually. Like I've learned this through the hard way. You need to have an exit plan. Don't be sitting in a burning building wishing God comes with a bucket of water and then pours it on top of you or on the water. No. God has given you two legs to escape, given you a mind to escape, plan something out of that fearful situation. Don't be an idiot. Exit with profits, with your life and with your money. Now, here's a chart example. This happened in the indices. I know I'm usually giving out examples of indices because it's just something which I'm relating to. You can do this with every other asset class. The mechanics are the similar, mechanics are the same. It's just the applications are different on different asset classes. That's it. So now we have what? We have NQ, we have ES. See what I told you? We have a range formed from the beginning of the week. Okay, so this is 15-minute time frame. This was the beginning of the week. Okay, we have a major candle. Now look over here. We have what? We have an impulsive major move displacement higher. Here, a lot of people would be buying, but look how lagging this price action is. Like it's just not, after this push, it's not willing to go higher. Over here, you can see. And then we have what? A retracement. I mean, a small time reversal, retracement, and then, all of this range, you can call it as a retracement into the rejection block right there, this rejection block. Okay. Then we have what? We have the opening true opening price right there. Now we have an open objective here. We have the Asian low here. You can call this the Asian high, the Asian low, right? You need one of these to be swept, right? In both the assets, we have the similar pattern forming right now, right? In ES as well, you can see how ES is drawing lower while NQ is staying like above, right? This is a tipping, this is literally price tipping its hand to you, right? How NQ is staying in premium while ES is in discount. There is also a crack in correlation. Now, here what do we have? We had the true opening right there. We had the true opening right there. We have an open objective here. We have an open objective here. While we have not swept the Asian low in NQ, while we did sweep it in ES. Why? Because ES was the closest to this low than NQ. If you draw a fib from here, from the lows to the high, and you draw the 50%, ES was literally like in its discount while NQ was in premium. So NQ will have a longer time or a tough time drawing back into the Asian low, while this one will draw back into the Asian low, right? So you have the Kraken correlation right there, number one, okay? And you have before that you have an open objective. You can see how there is a low resistance liquidity over here, highs, these two equal highs, relative equal highs over here, and we have a Kraken correlation at the lows. We have a Kraken correlation at the lows, and 15-minute time frame, what do we have? We have a change in the state of delivery right there from the 1:30 a.m. candle as well, right? We have a closing above the 1:30 candle, and we are below the actual true day open, and we have an open objective. So you see, the most important part is waiting over here. Less and until you're waiting, you're just blowing yourself up. This is the 90-minute cycle now. From the 15-minute, I'm just reviewing. I'm sorry, this was not the 15-minute. Actually, I'm mistaken over here. This was the 5-minute time frame, right? So I guess I did some mistakes in the presentation. Instead of 15-minute, instead of 5-minute, I wrote 15-minute over here. So this is 5-minute, not 15. Don't get confused over here, okay? So 90-minute cycle, you can see, since we have first Kraken correlation, right? We swept the liquidity over here, but not. We have another Kraken correlation on the 90-minute time frame as well, right? So the 90-minute itself is the actual sweep of the daily cycle, right? So we have a sweep over here, we have a sweep, we have a failure swing over here. Asian lows are here, and then Asian lows were taken over here. You can see this is the 90-minute cycle, and this can be the 5-minute time frame. Do not look at this 15-minute. I'm again telling you, do not look at this 15-minute. This is 5-minute, right? So we have, you can see how we are closing above true opening prices, and we have the true change in the state of delivery over here of the 90-minute cycle. This is the entry time frame, meaning this is the 5-minute time frame. All right, this is where I took my trade, this is where I took my entry right there. Plus, if you can notice, we have a new week opening gap right there. New week opening gap, new week opening gap. This proves what? This just makes it higher probability, much higher. Okay, and where you will take your partials, basically you have to take your partials at either at the low, like most relevant high, or at the true opening prices. True opening prices can be really good in order for you to load off, like offload your positions and take partials, because true openings are where the price will react from. They are places where price becomes very nuclear, right? So it can be a psychological relief for you to just take off some profits and then move your stop to break even or whatever. But this is how you take the entry. Basically, you have this closure right there. You can see this candle closed above this down close candle. The moment this closes above, you enter. Either you market enter, or you place a limit order or whatever, right? You let the candle retrace a little bit and then you enter, just to improve your RR. And you place the trade, you place your stop loss right there, you let it be. In this scenario, I would have taken this trade, basically this one. Why? Because there is no reason for ES to draw down below again, right? Because this has already swept. Here it might chop around a little bit in Q, but here in this case it did not. Still, I would take this trade, right? We have what? An open objective. We have an entry criteria, which is the change in the state of delivery over here from the 90-minute cycle. We take the entry from this order block. Moving ahead, the after effect. What do we have? Since NQ created the failure swing in both the time frames, in 90-minute as well as the daily cycle, NQ was the first to reach the objective, while since ES was lagging, we moved in a bit slower. Do not worry, we still reached our draw on liquidity right there. So you see how it works, see how everything came together. We had a open objective, we let price form a range, right? We let price take one part of the range to target the another end of the range or part of the range. The most difficult part in this is the waiting. believe me, you would have taken a trade here, you would have taken a trade here, or in this case as well, you would have taken a trade here, here, and then this has happened. This happens to me as well. Like basically, it happens to me time to time. Like I just enter price predicting that price will go higher instead of following logic and reasoning, and I hit my stop losses. In this case, of course, there was a very minimum drawdown, right? Very minimum drawdown, and we moved. And you can see over here, partials were here, and you can see how price formed a order block right at the true opening price over here. And this down close candle and this down close candle right there became the catalyst for price to move higher. And you can see this is the 6-hour time frame. Here we go with the CRT H4 candle range theory. In ES as well, we swept the low on the 4-hour time frame while we did not sweep the low on the 4-hour time frame. And you can see this candle is quite kind of an accumulation candle. See the 4-hour time frame here, this one as well. It's an accumulation candle. Once we have an accumulation candle, you can treat literally this candle as your candle range. This candle. There is some hidden secrets in this. I cannot literally like tell you all about it. But this is how you profile the market. We have the 2 a.m. open. So you need to buy below this opening price. Below this opening price. I know like you want to buy around here, or maybe buy around here in this low. You need to buy below the open of this just to make the after effect look very aesthetic. When you post a before and after of the trade and your entry is in the wick, the wick entry looks really beautiful on a screenshot. I mean, it looks really beautiful and clean because yeah, you caught the major chunk of the move. Stupid. Now 6-hour time frame, we have a sweep. 4-hour time frame had a candle range theory. 90-minute cycle, we had a sweep. See how CRT and quarterly theory are going hand in hand. This is something which I also teach in my one-on-one mentorship. If you guys are really keen on learning from me one-on-one, you can just give me a DM and we can move forward from there. I'll send you the details of the course. I'll send you the details of the curriculum. It's not like some bullshit idea which I have. I won't take every single one, but I have, literally I'll just take 2 people. Now, this is the final and last slide and the terminus of the video. If you have taken away some things from it, do comment in the comment section and stick to the videos which I post later on. Until then, good luck and good trading, guys. Take care.